If a company's profit dropped 20%, I would have run for the hills. I mean, that sounds terrible, doesn't it? But here's IndiGo, with ICICI Securities saying that it could hit 100 billion rupees in profit and giving it a strong buy rating. So I did what any confused investor does. I spent my weekend trying to figure out what these analysts see that I'm missing. And guys, this is exactly why we need to look beyond just the quarterly numbers. Because sometimes the story behind the numbers is way more important than the numbers themselves. Hi everyone, welcome back to the channel. If you're new here, I'm Chetna and I simplify company updates and financial news so that you can actually connect the dots. And in this video, we are going to talk about IndiGo's latest analyst rating from ICICI Securities, how they navigated a turbulent quarter and why despite all the chaos, the outlook is still steady. Let's dive in. First, let's talk about the quarter itself. Quarter 1 2026 was basically a nightmare quarter for Indian aviation. And I'm not exaggerating. In April, demand weakened after the tragic Pahalgam attacks, especially for Srinagar routes. Then, Pakistan closed its airspace, which meant 30 flights every single day had to take longer routes. In May, 10 airports in North India shut down, leading to around 170 daily flight cancellations. Just when things started to recover in June, the tragic Air India accident shook passenger sentiment. And to top it off, mid-June saw conflict between Iran and Israel, which forced cancellations of 100 flights per day for 2 days. Now, just pause and think. That's like one crisis after another. Any other airline would have probably shown a weak performance. But IndiGo, they still managed to post solid numbers. Passenger traffic was down 2.8% year-on-year, but up 11.5% compared to last quarter. Capacity expanded. Load factors dipped a little, but overall performance remained strong. This is where it clicked for me. Analysts aren't just looking at what happened in the last 3 months. They are looking at what's happening next. Here's what they highlight. First, air travel penetration in India is still low compared to global standards. More and more Indians are going to fly in the coming years. Second, international traffic is rising. More people are flying abroad, and IndiGo wants to be their go-to airline. Third, the supply-demand situation in Indian aviation is favorable. Yes, supply chains are easing up globally, but in India, demand is still likely to outpace supply in the near term. Put all this together, and ICICI believes IndiGo has the ability to clock almost 1 lakh crore profit after tax over time. That's huge. No wonder they have retained a buy rating. Now, let's talk about IndiGo's game plan. 2 words, premiumization and internationalization. On the premium side, they are rolling out IndiGo Stretch, basically extra legroom seats. This started in India and now it's being extended to international routes like Bangkok, Singapore and Dubai. And trust me, for budget-conscious travelers who still want some comfort, this is a smart move. On the international side, IndiGo is stepping into the big league. They have signed up for 6 Boeing 787 wide bodies through North Atlantic Airways. One has already arrived and the rest will come in financial year 2026. Feedback from the passengers on the Amsterdam and Manchester routes has been great. So now, IndiGo is increasing frequencies and even planning new routes to London and Copenhagen. This shows that IndiGo is no longer just a budget domestic airline. They are evolving, going premium, going global, and tapping into bigger markets. Alright, let's also touch upon the financials and costs because that's where many airlines struggle. IndiGo expects the cost, including fuel and forex, to remain flat this year compared to last. That stability is rare in aviation. They're also reducing dependence on damp leases, which should keep costs in check. Capacity guidance for quarter 2 financial year 2026 is lower, but this is a conscious decision. They want to match supply with seasonal demand and also use the downtime for aircraft inspections and upgrades so that they are fully ready for the busy Q3 travel season. Smart move. And the balance sheet? Rock solid. Cash reserves are nearly 494 billion, of which 348 billion is free cash. Debt has risen a little, but the cash cushion is strong enough to manage it. For investors, that's reassuring. So to wrap it up, IndiGo survived a quarter full of turbulence, literally and figuratively. Analysts still believe the long-term story is intact, thanks to India's growing aviation demand. The airline is not just surviving, but actually transforming, adding premium products and going international in a big way. Of course, risk remains. Geopolitical tensions, demand shocks, and global supply chain issues could hit in the future. But for now, IndiGo seems to be flying steady through the storm. If you found this breakdown helpful, make sure to hit that like button and share it with someone who's curious about the aviation sector. And don't forget to subscribe. I bring you more such company updates and financial insights that actually make sense. See you in the next video.